In this video, we're going to be looking at triple and multiple tops and bottoms, and some of the objectives discussed include recognizing triple and multiple tops and bottoms in real time with some examples that we will provide shortly. We'll also look at identifying the confirmation level, how to actually validate the formation. Is it really a triple or a multiple top and bottom situation respectively? We will show how to confirm that and how to know whether it's just a position that a formation that rather didn't happen. And the final objective will look at calculating price targets via equality projections. If you're pretty familiar with our videos, you would have seen the 1-to-1 projections and 2-to-1s and 3-to-1s and all sorts of things, and this is on that track. So let's begin. Triple and multiple tops are bearish reversal patterns, so they are ones that you would expect to break to the downside. They're very similar to double tops, except they have 3 or more peaks instead of just 2. The peaks have to form at roughly the same price level. They don't have to, because this is ultimately subjective, and you have to make a judgment as to how close the peaks have to be to count as a triple or a multiple top, because you can have more than 3 peaks. You can have a top with 4 peaks, and that would be classed as a multiple top, or 5 or whatever. It doesn't matter. But in this case, there's no precise rule for it, so these peaks should be pretty close. And a triple or multiple top pattern is only completed when price breaks below the lowest trough between the peaks. So these are examples of the troughs. This is 1, this is 2, and the lowest one is on number 2. And you can see that when the price breaks below that point, the pattern is complete. So technically, until you have that completion occur, the pattern doesn't really exist. And it's also important to note with respect to volume, that volume would usually decline as the pattern unfolds, and it contracts on the second and third, and if there are any more peaks, you'd expect the volume to contract accordingly. But volume should start to expand upon pattern completion, though, as the breakout and subsequent decline occurs. So you can see here, this breakout to the downside occurs. You would expect the price to drop, as obviously shown, but you would also expect the volume to increase. I assume sales would explode after the pattern, or relatively, with respect to the normal volume, when you have that break, as the price breaks towards the downside. So here's an example of a multiple top with 4 peaks highlighted in yellow. We can see one here, one here, one here, and the final one there. The blue level is showing the lowest trough between the peaks. The blue level is the pattern of completion, as we've labeled, and the pattern is only completed if it breaks below there. And once the breakout confirms the pattern is completed, we can take our very own favorite method of a 1-to-1 equality projection to calculate a minimum price target by taking the measured move between the peaks, which are shown here, and the lowest trough of the pattern, which is shown there, the area that I'm kind of trying to show here. And then you project that difference down from that point of breakout. So we can see that the price declined down here to the green level. That's the price target from the 1-to-1 equality projection. And it found support here and reversed from there. It's common that these equality projections act as support and resistance, as we've seen in this example. So the triple or multiple bottom formation is a bullish reversal pattern. It has 3 or more troughs, depending on whether it's a triple or a multiple bottom, and these troughs form at the same price level, and price is expected to rise after completion of the pattern. And the pattern is completed when the price breaks above the highest peak between the lows. And until this breakout happens, the pattern does not actually exist. Remember, these are the troughs, these are the peaks, this is the highest peak in between the lows, and you can see once the price breaks above there, you would have the completion of, in this case, a triple bottom formation. And to note with volume, like we did with the opposite of this formation, volume will generally be lower on the second and third troughs, this one and this one. You would expect volume to get lower, and then it expands on the breakout. The breakout formation occurs, it's a bullish reversal pattern, as we stated earlier, so you'd expect, as the price breaks out, volume to expand rapidly as well. as a result of people obviously buying. So here's a triple bottom with 3 troughs highlighted in yellow. We've got one here, here, another, and the final trough is shown there, all these yellow highlights. The pattern is completed for a triple bottom formation when the price breaks above the highest peak. This is the highest peak. You can see it's marked by the blue level as well. We've got a horizontal line. And from there, the minimum price target is calculated by projecting the measured move from the point of breakout. So the difference between this point and here, you'll get that height and you will project it on top of the breakout level. And we will be able to then get ourselves a little bit of a target for where you'd probably sell the currency pair, the euro against the pound, the British pound rather. So this is the chart we've got up here. And with all of these patterns, further targets could be derived by projecting something beyond the 1-to-1 target. So maybe you could use another multiple of the measured move from the breakout point, such as a 2-to-1 projection, which would be double this situation, or a 3-to-1 projection point. That's totally up to you. And if after the pattern completion occurs, say the price were to decline, it would only be considered a failed pattern only if it declined below the troughs of the pattern, which form the invalidation level. So if we see the price break above this point of breakout, then you have that pattern having occurred. But if it breaks below, there was a previous pattern that has now been invalidated, assuming it breaks below that point of breakout. If it never breaks above, then the formation was never really there, one could really argue. So to summarize all of that, I would say, remember the pattern can only fail if it exists in the first place. So it must complete this breakout first. You have to have the break above the point of breakout, the highest peak in between the troughs, for the pattern to have occurred. A triple bottom in this case wouldn't have occurred unless this criterion was met. And you can see now a triple bottom is confirmed after this situation occurs. So to conclude, triple and multiple tops and bottoms do occur in markets, although not as commonly as double tops and bottoms. And naturally, triple and multiple tops and bottoms begin by looking like a double top or a bottom, which we've covered before. And that goes on to form more peaks or troughs for bottoms, if that's the situation. So it's definitely worth being aware of them. And the important thing to remember is that the confirmation of a triple or multiple bottom comes from the breakout of the highest peak and a breakout of the lowest trough, as we've shown earlier in previous slides, for the completion of triple and multiple tops to have occurred.